Assalamualaikum and greetings. My name is Awang Muhammad Wais, and today, me and my fellow groupmates from Group 4 will be presenting about the comparative analysis of zakat and tax for individuals versus corporations. First, let's look at the scope of chargeability, which means who is liable to pay zakat and tax and on what basis. For individuals, tax applies to both residents and non-residents earning income in Malaysia. Residents are taxed at progressive rates and can claim personal reliefs, while non-residents are taxed at flat rates on Malaysian income without any relief. On the zakat side, only Muslims are liable, and only if their wealth or income reaches the nisab threshold, which is equal to the value of 85 grams of gold. This applies to income zakat like salaries, freelance income or business earnings, as well as wealth zakat such as savings, gold, and Sharia compliant investments. For corporations, zakat is applicable to Muslim-owned companies or those registered under Islamic principles. They must meet the nisab and be profitable, with zakat generally calculated at 2.5% of business profits. Taxation, on the other hand, applies to all companies, regardless of ownership. Resident companies are taxed on worldwide income, while non-resident companies are taxed only on Malaysian-sourced income. The corporation tax is flat at 24% through small and medium enterprises and may qualify for a reduced rate. Moving on to the basis of calculation for zakat, although the rate is same at 2.5%, the method differs for individuals and corporations. For individuals, zakat is applied to both income and wealth. This includes salaries, freelance earnings, business profits, and accumulated assets like savings, gold, and investments. To be liable though, the person's wealth must exceed the nisab value, which is based on 85 grams of gold. Before zakat is calculated, necessary living expenses such as food, housing, and education are deducted. Another condition is that the wealth must be generally be held for 1 lunar year or haul before zakat is due. After meeting these requirements, zakat is charged at 2.5% on the net adjusted income and surplus wealth. For corporations, the focus shifts to business profits and current assets. Just like individuals, companies must also exceed the threshold of nisab. However, instead of household expenses, corporations deduct allowable business expenses such as salaries, rent, and operational costs. Unlike individuals who observe the lunar year, corporations usually align zakat with their annual financial year. The rate is the same, 2.5%, but it is applied to adjusted profits or net current assets. So, the main difference that individuals pay zakat on surplus income and wealth after personal expenses, while corporations pay zakat on profits from business operations or on net assets after business expenses.
For the basis of calculation for tax for an individual, the individual chargeable income can be determined by calculating the total income of the individual. This total income can be derived from multiple sources, for example, employment income, side income, and rental income. The taxable income will then be deducted by tax relief depending on the individual circumstances. Tax relief is a tax deduction to reduce the financial burden and to support a healthier lifestyle among the taxpayers. This tax relief includes medical expenses, educational expenses, sport expenses, and self-relief. The higher an individual chargeable income, the higher tax rate that they will incur. However, individuals with 5,000 ringgit and below chargeable income is not required to pay for income tax. And now for the company, the chargeable income for company is calculated through their business profit, which can be seen through their financial statement. The profit should be adjusted to tax purposes by including non-deductible expenses such as depreciation, fines, and entertainment expenses. Income exempt for tax should also be removed as it is non-taxable. For example, capital gains and government grant. Capital allowance can also help in reducing chargeable income, especially in reducing the cost of asset over time. Government also gives incentives to SME companies, depending on the activity the business operates in. For example, the tax rate for companies is usually charged by a flat rate of 24%. However, for SME company, they can receive the benefits of reduced tax rate, such as 15% tax rate for the first 150,000 of chargeable income. This pushes the growth of SME company in Malaysia.
Greetings, my name is Jared James Justinus Sito, and I will talk about the contrast personal tax relief for individual with business expenses allowable for companies. The Malaysian tax system allows both individual and companies to reduce taxable income, but the mechanisms are different. Individuals benefit from predetermined personal tax relief that consider family and personal responsibilities, while companies deduct actual business expenses incurred in generating income. Both aim to reduce tax burdens, but individuals focus on social equity and companies on business fairness. For individuals, tax relief are capped amounts set by the Inland Revenue Board (LHDN). These include up to 9,000 for personal, 4,000 for a non-working spouse, between 2,008 and 8,000 for children, 7,000 for EPF and life insurance, and 2,500 for lifestyle expenses. Reliefs also cover medical and parental care. These are not meant to cover all costs, but to ease the burden while encouraging savings, health, and education spending. For companies, deductions are not capped but based on actual costs that are wholly and exclusive for businesses. This includes salaries, rent, marketing, professional fees, utilities, and even bad debts. They can also claim capital allowances on assets. This ensures that only net profits are taxed, which reflects the real capacity of businesses to pay taxes. The main difference lies in nature and flexibility. Personal reliefs are standardized and limited to meet policy goals like family support and education. Business expenses are adjustable and reflect operational needs, ensuring accurate profit measurement. Reliefs act as a social safety net, while deductions are accounting tools for tax fairness.
Next, I'll explain how zakat payments are treated for tax purposes for both individuals and companies. In Malaysia, zakat payments receive favorable tax treatment with distinct benefits for individuals and companies. For individuals, zakat is eligible for a tax rebate, which directly reduces the final amount of income tax payable up to the total tax charge for that year. This applies to various types of zakat, including zakat fitrah and zakat al-mal, provided the payments are made to an authorized body with an official receipt. In contrast, for companies, zakat is treated as a tax deduction, where the amount paid is deducted from the company's business income before calculating its chargeable income. This deduction is capped at 2.5% of the company aggregate income and is primarily applicable to zakat perniagaan, business zakat. While both methods provide a financial incentive to fulfill the religious obligation of zakat, the key difference lies in how the benefit is applied. A rebate directly lowers the tax bill for individuals, whereas a deduction lowers the taxable income for companies.
My name is Nurizawan Satulumita Arshad, and now I'll be presenting a comparison between progressive tax rate for individuals and flat tax rate for corporation in Malaysia, with a focus on how zakat integrate into this fiscal framework. Malaysian tax system apply two main structures: progressive rate for individuals and flat rates for corporation. Alongside this, zakat and Islamic financial obligation is imposed at a fixed rate of 2.5% when well exceed the nisab threshold. This dual system reflects both statutory and religious responsibilities. Here we can see the key difference. Individual are taxed progressively starting from 0% up to 30%, while corporations are taxed at a flat rate between 70% and 24%, depending on their size. Zakat, however, is fixed at 2.5% and applies only when wealth exceeds the nisab, which is currently around 32,000 ringgit. For individuals, zakat can be claimed as a rebate, while corporations treat it as a deductible expense. It shows that Malaysia's tax and zakat system are designed to balance fiscal policy with ethical responsibility. While tax rates reflect economic capacity, zakat introduces a spiritual dimension to financial planning. Their integration support both equitable wealth distribution and religious accountability. With that, this marks the end of our presentation here. That's all from us and thank you very much.